The $100 silver reckoning is thundering toward us like a freight train in the dead of night, with banks banned from touching physical metal and the dollar's relentless weakness stoking the coals for a 500% surge that could leave entire economies smoldering in its wake. The 10th of December 2025. Right here, right now. The Federal Reserve unleashed its third rate cut of the year this morning, a razor-thin 0.25% shave that nudged the federal funds rate down to that precarious 3.5 to 75% range, a maneuver the markets had penciled in at a rock-solid 87% probability. But Jerome Powell's post-meeting monologue? It dripped with the venom of hawkish restraint, underscoring a core PCE inflation rate still stubbornly glued at 8%, and warning that further easing is far from automatic, sketching out a 2026 roadmap with just 2 more modest quarter-point adjustments on the horizon, not the gushing torrent of liquidity that the trading desks had been toasting with their pre-dawn espressos. The dollar index, in response, didn't just slip, it plummeted to 99. 2, carving out a 5-week nadir that ranks as its most feeble footing since the tariff tempest tore through the summer, marking a full 7% erosion year to date. That's got currency traders twisting in their ergonomic chairs. Silver, in this maelstrom, didn't content itself with a polite assent. It detonated to $61 an ounce, a blistering 102% year-to-date rampage that pulverizes every benchmark etched since the Hunt brothers' audacious 1,980 cornering attempt. Gold trailed in its fiery wake at $4,216, boasting a respectable 55% climb, but silver's dual essence, as both ancient money and modern industrial lifeline, makes its surge the reckoning's roaring prelude. Yet, what truly clawed at the edges of my sanity this morning, as I sifted through the fresh deluge of Asia-Pacific regulatory filings with the Bloomberg terminal's glow casting long shadows across my desk, was the escalating cascade of bans. 4 powerhouse South Korean banks, KB Kookmin, Shinhan, Hana, and Woori, slamming the gates shut on physical silver sales back on the 14th of February 2025, not for a fleeting holiday pause, but indefinitely, these behemoths of capital admitting defeat in the face of sourcing nightmares. Layer on China's draconian edicts, reclassifying precious metals as high-risk assets to effectively bar citizens from bank channel purchases, while state silos swell unchecked, and Russia's ongoing exile from London metal exchange floors since April 2024, redirecting every ounce inward to fortify BRICS bulwarks. All this unfolds as the USD's 99. 2 weakness acts like dry tinder to a match, igniting a physical metal exodus that's banning banks from the game just as the real play begins. Why these ironclad prohibitions clamping down with such ferocity right now, precisely when the dollar's debasement is dialing up the desperation? My theory, painstakingly pieced together over countless marathon sessions poring over COMEX custody ledgers, Silver Institute deficit dossiers, and the labyrinthine threads of geopolitical wire reports, is that this reckoning transcends mere regulatory reflex. It's the visceral harbinger of stage 3 in a 4-stage cataclysm that's methodically dismantled asset classes from the oil oligarchies of the 1,970 seconds to the 1,000 palladium purgatory of the early 2020 seconds. The Fed's ostensibly dovish cut has fractured the dollar's dam, unleashing a torrent of capital flight toward tangible treasures. But those hawkish aftertones? They're the concealed tripwire to stage 4, where silver's trajectory won't meander toward $100 by mid-2026. It will hurl itself there in a 500% conflagration, with premiums prefiguring the purge and stragglers left scrabbling at vault doors long bolted by bans. BRICS nations are murmuring hybrid gold-silver settlement mechanisms that could siphon 30% of trade volumes by 2028. Industrial behemoths from solar panel fabs to EV assembly lines are vampirizing ounces at rates outstripping extraction by 149 million annually, and central bank hordes are devouring 1,200 tons of gold in parallel frenzy, up a blistering 20% from last year, yet it's silver's schizophrenic soul, straddling millennia of monetary veneration and the unyielding demands of 21st century circuitry that positions it as the undisputed fulcrum of this financial Armageddon. At $61, silver isn't merely ascending a staircase, it's teetering on the precipice of an abyss, grotesquely undervalued in the shadow of $350 trillion in global debt and the 54-year farce of fiat fragility that Nixon's 1,971 gold window decapitation unleashed upon the world. The window to lay claim to physical silver before the bans become the norm, and the surge seals the fate of the fiat faithful, It's fracturing under the weight of these prohibitions and buckling beneath the dollar's descent, but you still clutch the crowbar to pry it open if you summon the resolve to wedge it in before Stage 4's 500% Holocaust hammers the last nail into scarcity's unyielding coffin. Before we pry deeper into this prohibited pandemonium, let me fortify the forefront with unyielding clarity. I'm not a financial advisor, and nothing fracturing forth from this dissection constitutes financial advice in any form or fashion. This is an unflinching, educational exhumation drawn exclusively from public repositories, the exhaustive COMEX custody chronicles, the PBOC's prohibition proclamations, the IEA's industrial intake imperatives, the unvarnished Bloomberg ban bulletins. I've tunneled through these troves like a miner in a collapsing vein, fusing the fractured facts into a framework, and the fortress that fortifies our forward path isn't phantasmagoria, it's the self-same, siege-hardened stronghold that systematically stripped speculators bare and sovereignly elevated the steadfast across silver's storied, scar-riddled scroll. To truly fathom why the $100 silver reckoning is inexorably unfolding with banks barricaded from physical access and the dollar's enfeeblement as the eschatological ember kindling a 500% conflagration, we must methodically mine the four-stage monolith that's mercilessly mauled markets from the aureate adulterations of ancient Rome to the OPEC oil odysseys of the 1,970 seconds, a formidable framework where complacency constructs the catacomb, expansion excavates the chasm, recognition ruptures the ramparts, and eruption engulfs the empire in eschaton. This edifice isn't ephemeral ether spun from speculative ether, it's excavated from the enduring entrenchments of epochal upheavals, from the blight-blasted barrenness of Ireland's 1,840 seconds famine to the Russian-rigged rigidity of Palladium's 2020 plague, and presently it pulverizes silver's precarious pillars with the USD's 99.2 nadir as the necrotic nerve center. Stage 1 is complacency, the clandestine cloister where copiousness cultivates catastrophe's cradle. Envision the post-1980 Hunt Holocaust. Silver staggered to sub-$10 derision. Regulators rearing a rampart of regulatory reprisal, futures, fortifications, fortifying 50 times the physical fortifications, open interest overindulging to 244% of COMEX's custodial capacity. Complacency commandeered the commons. Prices picketed perpetually under $30 for a languid decade. Central cathedrals cascading reserves like confetti at a coronation. Industrial ingestion idling indolently at 40%, while mines marshaled 100 million-ounce surpluses with scornful surplus. Debt dormant dawdling at 50% of GDP. Fiat, freshly forged from 1971's Nixon notch, unbuckled but unbowed, unquestioned as the unassailable umpire. The system slumbered in smug serenity, hoard the holographs, hail the handlers, disregard the dirge of depleted depths. Complacency compacted silver's intrinsic worth into a coiled catastrophe, a camouflaged catapult cloaked in the calm of collective credulity, cocking the crossbow of crisis with cruel cunning. Stage 2 is expansion, the encroaching entropy where escarpments erode inexorably but empires endure in egregious error. The 2008 edifice's entropic eclipse epitomized it. Lehman liquefied in liquidity's lethal lapse. A 30 trillion QE quay quarried from global granaries, the Fed's folio fattening from 4 to 8 trillion in fiscal fat. Edicts erected empires of edifice derivatives delving into quadrillion depths of delusion, silver shorts storming the shores to stalemate any semblance of spike, prices probing perilously, then prodded back into perdition despite deficits denting the dike. Industrial insurgency insinuated itself insidiously. Solar slurping silver paste in surging quantities, doubling to 85 million ounces by 2020. Electric vehicles engorging their electrolytic entrails with 3 times the gas-guzzling ghosts. 5G spires and AI arsenals aching for the alloy's arcane arc of conductivity that no ersatz element emulates. The Silver Institute scores a seismic 59% industrial ingestion by 2024, ascended from 40% a decade prior, while mine output maxed at 886 million in 2015, sagging 7% since byproduct blues bedeviled the zinc and copper cohorts. Deficits? A defiant 149 million ounces in 2024. The fifth salvo in this subterranean siege, shored up shoddily by scrap stocks and above-ground afterthoughts, but expansion entombed the evidence. Paper peddling, 1-0-0 to 1, the tangible treasures. J.P. Morgan jockeying judiciously from shorts to secret stashes in the shadows of settlement fines. The USD, unruffled in its pre-99 plunge, but expansion excavated the entrenchment with excruciating exactitude. M2 money supply mushrooming 40% post-plague. Inflation incognito via CPI chicanery and methodological misdirection. Silver stewing in slighted silence as fiat festered in fetid forgetfulness. Stage 3 is the break, the breach where bastions buckle beneath the bands and the dollar's debility broadcasts the barricade's betrayal. This is the brink we balance upon, barricaded by the Fed's feckless felling this morning and the USD's 99.2 declivity disclosure, dawning that digging dawdles disastrously, central coffers commandeering 1,200 tons of gold in grim tandem, China's citizen clampdowns the clarion call of capitulation, COMEX custody, carved cruelly from 80 million ounces in October 2024 to a precarious 43 million now, 37. 6 million, hewn in the harrowing 47 days past, the harshest harvest since 1980's hollowing horror. November 17 alone, 6 million scythed in a single day's savagery. Lease levies leaping to 30% annualized extortion, etched in emerald for ephemeral extras. Backwardation baring its fangs with spot $61, besting December deliverables by a defiant 40 cents. Contango contorted into contemptuous convolution. Korea's quartet of quintessence, KB, Kookmin, Shinhan, Hana, Wuri, quit the physical quarry on February 14, perpetual prohibition, these titans of trade tapping out in terse telegram. China clamps citizens via risk reclassifications that render bank-bought bars a bureaucratic bogeyman, state silos swelling surreptitiously at 200 million ounces yearly, exports embargoed under edicts of economic entrenchment. India's influx? A 2024 inundation of insatiable import, rupee refugees ramparting their riches against recurring ruination. Russia, London locked since April's acrimonious acts, redirects reserves relentlessly BRICS-bound in a bid for balanced bastion. The Fed flail? The cut craters the USD 7% year-to-date to 99.2, beckoning a bullion barrage of biblical breadth, but the hawkish adherent PCE arrests any advance, yields yanking a half point to 8%. Volatility vituperating the venturers in a vortex of vitriol before victory's vindication. JPM's $38 late 2025 finale, $23 of debris in the dustbin. Cities 36 to 39, vaporized in the vortex. Lepard's 75 to 90 for 2026, tame as a tabby in this tiger's tail. The gold-silver ratio at 7:2 to 1, reverting to historical 1:5 to 1. Math mandates $280 with gold anchored at 4,000. 200 industrial ignition, the IEA's 400 gigawatts of solar sorcery slated for 2025 gulps 200 million ounces by 2028. EVs escalating their electrolytic excesses per unit, AI and 5G avarice adding another 50 million to the maw. Mines, 70% byproduct bound in a Byzantine bind, capex catatonic in a coma of caution, yielding naught despite the $50 spike. The Silver Institute's 118 million ounce 2025 shortfall, spark to the pyre, tinder to the tempest. JPM's 169 million ounce custody, commandeering 40% of COMEX's catch, with 13.4 million rekeyed from registered to ineligible at the zenith of demand. Why warehouse such industrial scrap as the sages sneer with smug superiority? Because the 1-0-0-1 parchment precipice plummets perilously, the CME's November 28 chill malfunction blackout ballooning silver to $56.72 in 10 hours of tenebrous turmoil, spreads spanning dollars in desperate discord. ETF egress echoes 2011's exodus, premiums pulsing 3 to 5 over spot, dealers dallying in delay as inventories implode. The USD's 99.2 descent, dynamo of divine destruction, fiat's 54-year farce since Nixon's nicked the gold nerve in 1971, minting masked by manipulative metrics, now nexus with nil's inexorable nibble. Stage 3 strangles the speculators in slow strangulation. $61, the surge's snarl and savage summons $100, the reckoning's rampage, or the window welds shut as bands bolt the breach with unbreakable finality. Stage 4 is the eruption, the reckoning's rampart ruinous rapture, where valuations vaporize in volcanic valor, $100. The altar of atonement, as bans bar the bankers from physical's promised land and dollar debility dynamites, a 500% detonation that dawns like doomsday. Sovereign salvo shatters the silence first. China codifies its clamps into categorical creed. BRICS bolts bilateral clauses into binding bedrock. COMEX calls cascade in a 50% cyclone as ETFs exile their ethereal ether for the essence of enduring element. Yields yaw and yammer in the Fed's fetid fetter. The cut conjures negative real rates, netting a 20% exodus from emerging market entrapments. Inflation's 3. 2% core compels a curtailment of complacency. The dollar delving to 95 inches desperate descent. Gold's grievance gleaming at -1%, opportunity oblivion. JPM's calculus carves it clear. 566 tons of investor ingress quarterly in Q1 2026, 800 tons from central cathedrals. Mine misses mounting mercilessly. Buffers 50,000 tons above ground blitzed by quarters in quarterly quagmire. Gaps gash the graph like lightning lacerations. From $61 to $100 by mid-2026 on the cut's carryover current. The reckonings roar, redoubling as the fetter flays flesh from fiat's facade. Inflation inflames to 4% in furious feedback. Exigency easing engulfs the establishment. Dollar dominion dissolves in deluge. COMEX closures calcify into commonplace catastrophe. Defaults detonating at 20% of demands. Litanies of litigation lashing GLD's ghostly cash clauses like lashes on a debtor's back. Shorts shorn of $100 billion in bitter bloodletting. Premiums puff and purple into 30 to 60% monstrosities. $100 spot yields $150. Eagles in the engraver's embargoed era. Mints moribund for months morphing into years of yearning. The fetter's finesse is fiendish in its finesse. The hawkish hue today lulls legions into lethargy, debt duty ballooning to $2 trillion in servicing servitude by 2027 decrees, a debasement deluge, inflation's incubus incubating at 4%, incisions into rates infinite and inexhaustible, imperium imploding in imperceptible increments, BRICS bastions 30% gold girt and girded by 2028's grim geometry. Counter the chorus of the credulous with cold calculus. Substitution? Silver's sinew is supreme, conductivity's crown uncontested. A 20% potency penalty parrying any pretender's probe. Recycling? A risible 20% retrieval from the refuse of e-waste empires, solar sentinels shackled for 25 years in silicon sarcophagi. Mines muster fresh marrow? 7 to 10 years of gestational gestation, grades gutted by 30% in the last decade's declivity, capex in catatonic coma, despite the $50 spike siren song. Demand dwindles under duress? Doctrine and decree deny it utterly. EU's emerald edicts. China's colossal commitments. US. IRA's inexorable incentives mandate megaton momentum towards zero, unyielding as uranium. The USD upturns in triumph? The fetter faints it fleetingly, but the 130% GDP gravestone grinds printing into perpetual perdition. The reckoning rends reality with $50, $100, $150. Fortnight's fleet, as the fleet-footed flee, 500% surge the stage's signature scrawl, bans the unbreakable barricade, the windows weld a woebegone wail. Not a notion in the nebulous night nexus of nullity's inexorable gnaw. As the $100 silver reckoning rends the realm with banks banned from physical's forbidden fruit and dollar weakness, the wildfire's whip cracking across the canyon, the 500% surge summons not submission, but a siege mentality tenure over the treacherous tide, tenacity over the tremor of terror. First, bind yourself to bullion's bona fide bastion. Banish the ETF enigmas with their cash capitulation clauses and futures fumbles that flensed the fortunes of 1980's flotilla of the foolish. Beckon instead the bullion barons of the realm, American silver eagles, emblazoned with liberty's lash, Canadian maple leafs, minted in maple's unyielding maple, kilo keystones kite-marked for the kingdom-crossing koine of commerce, premiums pulsing at 2 to 3% over spot, serving as your bulwark when the bands bolster into unbreakable bastions. Beseech these bastions from the bastioned vanguard like JM Bullion or AppMex, serial scarred and sands the sham swells of spurious sourcing that surge in the shadows of scarcity. Second, besiege the bounty with swiftness and strategy. Physical trades at $5 over spot in this fleeting flicker. But the reckoning's roar will rampage those rivulets to $20, $40, even $50 as COMEX creaks under the crush. The Fed's feckless felling foments the frenzy, but the fetter faints, furloughs with its hawkish hiss, so fraction your forays into sub-$60 salvos, 10% parcels pairing the pattern's pernicious pang with prudent precision. Third, bracket your bastion boldly yet balanced. Allocate 10 to 15% of your holdings as the harbor against the hurricane. Silver's storied 1-0-1 triumphs in such reckoning, ramparts across the annals of adversity, vaulting to 20% if the debt. Dirges deepen into dirge, dovetailed deftly with gold's granite guardianship, or gilt's guarded yield to guard against the gale's gusts, and the bolt from blues that bedevil the bold. Harbor the heuristic of history, not hazard the hearth of your haven in heedless haste. Fourth, bastion your bounty with unyielding unassailability. Domicile donjons for your dozen discs of deliverance dowled deep, defended with dragonfire defiant fortitude, assured against the arson of accident or apportioned alcazars like Brinks or Delaware Depository, for the breadth of your bulwarks, bailiwick yours alone in absolute authority, no banker byways burrowing or custodian chinks chipping away at your chattel. Disperse your depots diversely versus the draft dreads of confiscation chills that creep in the crevices of reckoning rifts and regulatory ravages. Fifth, beacon your bastion with ceaseless and calibrated vigilance. Chronicle the COMEX custody cadence weekly with the precision of a watchmaker, Silver Institute shortfalls semi-annually with the scrutiny of a surgeon, IEA intake impulses monthly through the lens of a lighthouse keeper. Arm yourself with Kitco Claxons or TradingView talismans as your touchstone, theorem thrashing the tempest static into strategic silence. The reckoning's risen from the recesses, the USD at 99. 2. The ram's relentless rush and ruinous recoil. $100, the rampart's ruthless revelation, or the window's weld into woebegone wilderness. With bands, the bolt of unbreakable finality, bifurcate the bare bones of your being. Breach the blaze burnished in bullion's blaze, or behold the barrage of the bereft, bereaved, and bewildered, as $150 spot scours the solstice slumbers of the slumbering. Fiat's frail filament flickers 27 years its median mortality, the dollar's 54 fathoms deep in fiat's fathomless fraud, unbirthable silver the bane and balm of the beleaguered. If the blaze beckons with the bite of inevitability in your blood's bold beat, subscribe to this sentinel's summons. I'll scour the scorches and surges in synchronous scrutiny, from COMEX chinks chiseled by the chisel of crisis to China's clamps clamped in clandestine calculus. Remark below with the raw rip of your reckoning. $100 by mid-2026, or does the fetter fell it in its fledgling flight? Your riffs rive the reckoning's relentless river, refining the riptide for all who ride. And next, the muffled manipulators emerge from the murk. Fines funneled into forgotten footnotes, shorts shrouded in the shroud of secrecy, the stranglehold sundered at last, in a symphony of shattered silence. The ram rams home, reclaim your realm or rue the reckoning's ruthless retreat.